Good afternoon. This is Mike Stanfield with Inhabit Los Angeles. I'm a realtor here in the Los Angeles area, part of the EXP brokerage and also part of the Serene team, our local team that covers pretty much all of Orange County, Inland Empire, and the Los Angeles area. So I'm going to be kind of talking about where we're starting to see the 2025 projections of real estate here in Los Angeles, so you can be better informed moving forward if you're looking to purchase, sell, whatever you need to do. So what we're seeing right now is in the last 2 years, we're seeing more homes for sale. And what that means for the buyer is that, as anything in the world, it's all supply and demand, right? The more homes that are on the market, the more the price, it doesn't necessarily go up as fast because people don't need to overpay for a home that when there could be one right next door, right? So supply and demand, the more homes on the market means the price just doesn't rise as fast, right? So as you can see right here, let's see my mouse. So if you can see right here, right, the reason why there's always a dip kind of every year right here is traditionally families just don't put their home on the market during the holidays. Let's see right here. So right around here, right, people, there's a dip. People are like, you know what, I'm just going to take my home off the market. I'm going to wait till the summer, right? And that's why during the summers, you can kind of see a larger swing of homes, right? But if you're noticing this swing in 2023 and then to 2024, the swing is a lot larger, meaning more homes went on the market during the 2024 summer, with projections being possibly the same volume or probably more homes being on the market this summer of 2025, which is a good thing, again, for buyers, because it means more homes on the market, meaning maybe you don't have to pay as much. Though it is Los Angeles and home prices statistically just kind of keep going up in price. For anyone who's waiting for a housing crash, I don't know if that will be happening. So we might see dips in home prices. The market isn't as crazy enough to warrant a dramatic crash. Let's see. Okay, so here is what we're starting to see also is statistically people around the age of 65 is usually retirement age. They have kind of empty nesters, right? Their children are, 20, 25, whatever the age is, and they're moving out or they've already moved out. So now you've got this 2, 3, 4 bedroom house where it's just you and possibly you and your partner, and they want to downsize. This is an opportunity for home buyers to purchase because there's these families are looking to downsize. And what that also means for people who are selling a home, if you have a smaller home and you're looking to upgrade into a larger home, you have a larger volume of 65-year-olds who are looking to move into a 1 or 2 bedroom home. Okay, so here we have the rough time frame that people traditionally live in their home. The 7-year mark is right around the point where there's a pretty even balance of how much you've paid into a home versus how much the home is worth. And at this point, people kind of see that and they upsize, they upgrade, right? So they sell their home, take that money, and then they put it into a larger home, or potentially they downgrade, they sell their home, and then maybe put a bigger chunk into a smaller home, which means their home payment is less. So the 6-year mark is generally, right around that timeline. Okay, so we're also seeing that there are a lot of Americans who own their home, 40% own their home free and clear. So when they sell, it's not out of urgency or out of the fact that they have some issues and they're not able to pay their mortgage, which means they kind of can sell whenever they're ready to sell. And then 30% have already 50% of equity in their home, which is a wonderful thing. Also, same thing. They're able to sell when they want to sell. So we're starting to see a growth also in the home listings, meaning homes that are coming on the market. As you can see right here, 2024, we saw a little bit under 1,000 homes on the market. And now this year, we see an 18% growth. So more homes on the market, which means housing prices will Just maybe hopefully they won't climb as rapidly, right? Supply and demand is a big thing. And as you can see right here, this is kind of the trajectory, right? It's going up because right now during the summers, that's when homes are on the market. So we're seeing more homes, right? And then they obviously dip during the holidays because people don't want to sell during the holidays. JP Morgan expects home prices to rise by 3%, which is pretty average year over year. If you take a, step back, home prices rise between 6 to 4% every year. So this is the forecast of home prices or growth, or there's people who are forecasting it's not growing from every different facet of the real estate market, right? So we have Wells Fargo in loans, goes all the way down to websites like Realtor, Redfin, Zillow. So they're aggregating data that they're receiving on their websites, all the way down to Morgan Stanley, who's also, providing loans and whatnot. So we're estimating, a 2.8% home price growth, according to kind of all these companies. Here's something interesting. I'll make this quick and brief. They're saying basically that because of the homes that were lost during the fires, there might be a upward pressure on home prices in the surrounding neighborhoods, which is like Pasadena, South Pasadena, Sierra Madre, things like that. I don't know. That seems natural, right? If homes are burning down, someone's going to be trying to, purchase new homes. So Santa Monica area for the Malibu fires, things like that. But this is just kind of a theory from U.S. News. House prices, just kind of giving everyone data to see that the growth of homes, this is kind of the average growth of homes, right? This is what we're seeing now. Every 30 years, the home prices from 30 years prior, it's gone up this percent, roughly, right? I'm not saying exact, but year after year, on average, home prices go up. This one I really like. So this is the mortgage rate projections. Again, nobody can tell the future, but with the government kind of going through a little bips and bumps right now with tariffs and whatnot, there might be a increase in inflation with household items, which might cause people to kind of slow down spending. By doing that, the government should kind of adjust interest rates to stimulate some spending, potentially lowering prices of interest rates or bonds or whatnot to kind of stimulate a little bit. So that's why you're seeing a slight lowering of interest rates. And here is kind of the data from it, January of 2025. And then we had a little bump, right, up, not a good thing. But then as you see, it's starting to slowly decline from, 7% all the way down to 6.75, which is great. Okay, so now wrapping this all up, what does this mean for you? This means that if you are in the market to purchase a home, we're seeing that there are going to be more homes on the market. The interest rates might be dipping a tiny bit. Hopefully that will level home prices out so they won't be shooting up too high this year. I don't know. But according to NerdWallet, we're going to be seeing a fair amount of people who have been waiting on the sidelines to purchase a home. And so they might be jumping into the market this year with a growth of about 4% from last year. So this information is purely informational. Nobody can tell the future. We don't know. We're just using this data to kind of speculate what might be happening in the future. If you have any questions, please reach out. Thank you so much for watching. And best of luck. Bye.